Netflix just reported, and in my opinion, they crushed $4.88 per share in earnings per share versus $4.76 expected. $9.56 billion in revenue versus $9.53. So they minor beat there, but guys, ready for this one? 8.05 million new subs, beating the estimate of 4.5 million. That's a huge beat, a ginormous beat. For me, Netflix is the first app I go to when I want to stream, unless I'm watching a specific show. Like I hate to say this on a Netflix video, but I'm watching the show Divorce on HBO back in 2016, 17, 18, something like that. Great show, very funny. Lisa and I love it. And it's got Thomas Hayden Church and Sarah Jessica Parker. But how's the stock doing after hours right now, Mo?
Down about 3% right now.
Wow. So what, $20?
Yep.
Wow. Guys, you know what the interesting part about Netflix is?
It's down 2.5%.
Netflix isn't even close to its all-time high from 2021. No, it is close, actually. $700 a share. But look how low it got. It got as low as $162 per share. $162. From 700 back in November of 2021 and May of 2022. A mere 16 months later. Am I doing that math right? No, I'm not. A mere 7 months later, wow, got that wrong. They were down to $162 a share. This is Netflix, guys. Netflix is the one that we all use. That just shows how fickle and volatile stocks can be, Mr. Market. So this is our Everything Money 24/7 channel. If you like earnings releases, if you like reports on the market, if you like this, we do this 4 or 5 times per week. Do me a favor. Subscribe to the channel, check back with us often because we do videos as often as we can, especially when things are red, because we want to be the calm for everybody. We will be the calm for everybody because we like red days. That's better for us. Today was also a red day, Mo. Mo, what are you looking at? You're like crunching your face over there.
I'm just surprised at this. So it's been about 18 months since they launched their ad-based subscription. It accounts for over 45% of all signups in their ad market.
Wow.
That's crazy.
Wow.
It's $6.99 a month. People clearly are loving it.
So somebody who wants this stuff, like, you know, it's funny. I pay like $50 a month for Hulu and I still get ads and stuff. It's like, right? Yeah. I mean, it's kind of annoying. I like Netflix not having ads. That is fun, but
I guess if you know you're paying something cheap and you know what's coming, I think it's 4 minutes of ads per hour or something.
And it gives you time to go to the fridge and get yourself a drink and save some money. Wow. Mo, are you going to go to the $6.99 option?
No.
Yeah, never mind. So, $284 billion market cap, $304 billion enterprise value. That $20 billion difference essentially is the net debt. And they've done $7 billion in free cash flow in the last year. Mo, can you look up in this report how much free cash flow they had this quarter? Yeah. Because, guys, the biggest issue I had with Netflix in the past was this. 5-year average free cash flow is around $2 billion. 5-year average net income, 4.3. There was a huge difference in net income to free cash flow. We want free cash flow at least as high or close to it, the net income, and this was so far off. But now we see 6.95 versus 6.44.
1.3 billion versus 1.4 in the previous period.
Okay, so they're 1.3 billion. If they did it 4 times in a year, it'd be 5.2 billion total. Okay, so it's down a little bit if you consider it a linear equal thing. And they are down from last year's same quarter. Not the worst thing in the world. Return on invested capital is getting better. 11.36 in the last 5 years, 12.9 right now.
That's good.
Gross margin, 43%. Growth rate is, I mean, look at this growth rate. 22% in the last 10 years for revenue. 16% 5-year, 9.8 for the last 3 years. And guys, this is what's interesting to me. People see growth in the past and they go, oh, I got to pay a premium for this. Yeah. But you got to remember, it's harder to grow as you get bigger and bigger and bigger.
It's showing that right there.
Right? So what are the 8 pillars telling us? Oh, Mo, actually go through a little more in the earnings release and tell me what you see.
You talked about the paid memberships. So listen to this for the paid memberships. It was 84.1 million. 75.5 million was the same quarter last year. That's pretty good growth.
That's a pretty good jump.
I mean, for being from 75 million. Let's see what else we have here. They did a lot of talking about the shows. Your Tom Brady roast.
Yeah.
That did pretty well. I didn't watch it.
Oh my
Those
God!
things make me very uncomfortable. 22.6
Wait a second. They make you uncomfortable.
Yeah,
you're literally the thickest skinned person I know.
I know, but it's just weird.
You could literally lose your dog, and I could make fun of your dog dying in front of you, and you'd probably laugh at that.
Probably. One of the nicest things you ever said to me was that.
What? That your dog would die?
No, of course not. That I have the thickest skin of anybody you know.
You probably do. Yeah.
Who's above me? Tim just said top 5.
Yeah.
Donald Trump.
I don't think Donald Trump is as thick skinned as people think.
No? Takes bullets.
Here we go.
Have you watched the show Bridgerton?
No, Lisa started to watch it, and so here's my deal.
I think it's terrible.
Do you? Any show that like has this like old type of feel to it?
Yes.
Like I just don't like that stuff.
172 million views.
First off, let's get back to the Tom Brady roast.
Okay.
Nikki Glaser did a great job. This woman, I hope this took her career. I said this in the last time we did a video about. I hope it takes her career to another level because she is effing hilarious. When she said the comment about her boyfriend that she loves, and she's like, I have a boyfriend for 10 years. I love this guy, but I would shoot him in the face for the chance of a lottery ticket in order to suck this man off. I was just like, God. She was incredible. And the Gronk comment, me know this not money, not real money. Oh my Lord. Everything was so great there. Guy from Youngstown was the roast. What's the guy who has the show? You know what I'm talking about. Market.
Actually, I have it on our screen right here. Kill Tony.
Yeah. So Kill Tony from Youngstown, Ohio, where Tim, our CEO, is from. Netflix is a great job. I think they did a smart move by doing this roast stuff. I don't think they bought the rights to it. I think they just did it. I don't think it's like a requirement. Go ahead.
They're also going to do the Jake Paul, Mike Tyson fight.
That's right.
I can't wait. That was rescheduled.
Jake Paul, another Cleveland guy. Mike Tyson lived in Cleveland for a long time. Look at all this Cleveland stuff going on.
Upcoming events, Joe Rogan, Burn the Boats. I don't know what that is. Joey Chestnut versus Kobayashi.
Oh, they're doing that?
I guess.
That's a smart idea because Joey Chestnut got banned from the Nason's hot dog.
In May, we announced Netflix will be the home of both Christmas Day NFL games. Oh, wow, that's cool. In 25 and 26, Christmas Day. Cool.
Yeah, that's incredible. So Netflix is doing a good job.
Clearly.
And hopefully their free cash flow is starting to come together. But guys, here's the deal. I'm ignoring this because it's based on their 5-year free cash flow. I'm going to assume this new free cash flow is here to stay and grow. But you still have a price of free cash flow of 41 on a company I think it's going to be hard to see their revenue really increase dramatically. They're still at 41, Mo. That's pretty high. That's high. With a huge jump in their free cash flow. Mm-hmm. So frankly, I'm ignoring this 5-year number for free cash flow, just ignoring it because it's absolute garbage. Yeah. Absolute garbage. I look at this and I just think this just seems expensive. Now, guys, this is what we do on the main channel, Everything Money. Subscribe to this channel. We give quick updates. We do more stock analysis in the main channel. If you want us to see stock analysis of this, please comment below and say, guys, do a stock analysis video on Netflix, and we will gladly get to it. Don't forget to subscribe. Thank you very much for your time.